Hello, it's been a while, and so welcome to a trade recap by myself, Nora. Um, I think the last one was towards the end of January, and we're now into April. I hope you've all had a cracking Q1, and yeah, excited for Q2. Got a lot of exciting things coming up, like the masterclass, and just some other things that will be released soon. So yeah, if you want to join the masterclass, sign up, because I think it's only 2 weeks away now. But yeah, without further ado, let's just jump straight in. I traded Monday and Thursday, I believe, this week. And yeah, we'll jump straight in. So, from a weekly perspective, we can see that after this mitigation up here, we had some bearish shifts to the downside. We see like this red circle indicates the initial reaction to demand. So this is the initial reaction to this demand. I've made this green, so this is the extreme of the initial reaction. We've pushed down, it's failed to break, and then we've taken out demand here. We've swept the low, didn't actually break and close. So therefore, I was seeing this as inducement for this extreme point up here. It's quite clean buy to sell. So we had inducement here. It's taking liquidity within the flip. So if you pretend this was a 15-minute time frame, this would be a clear continuation entry here. So I know, like, we can see that it's wicked through, but initial trades on Monday were taken within here with this understanding that we could be getting the weekly bearish push to the downside. So yeah, jumping down into the daily, there's not really too much to show. It's just a more granular of the weekly, but we can see that, let's say this was structured, broke to the upside, pulled back, broke bearish. Let me delete these circles now. Broke bearish. This swept this low, didn't actually close, so only now this candle here on the 5th of April in theory has changed swing structure to bullish. But yeah, so after this break here, expectation order flows, you'd expect a pullback. So, and then this is the trading range currently, but this close isn't very convincing. That is a massive wick up and then an aggressive retrace. So it could just be a sweep of the highs. And then if you go back to the weekly, you can just see that after it's taken out this key level here, that is a very aggressive turnaround. So yeah, directional bias, it could go either way, to be honest. So moving down into the 4-hour now, if I just come back to here. So what I was seeing at the beginning of the week is we're just accumulating or distributing orders here. So a distribution would then favor downside, or a reaccumulation is just basically an impulse correction and an impulse. But based on the weekly, I was seeing if we could get that bearish push to the downside. So I was seeing this as a distribution or then shifting of order flow and liquidity generation to the downside. I was seeing this as a demand holding to create liquidity or the bearish push. But as you can see from when it was on the higher time frames, it did end up going to the upside. But let's just move over here. So I was seeing this, we took out the highs here. So I'm just going to refine this to this top section basically, and then seeing this as inducement, so we could just go even higher, maybe to this wick. Basically it's coming to this extreme point up here, and then we're just in the range. So let's go down to 15-minute, we'll see things clearer. So I was seeing this as structure. So we broke here, we've pulled back, we've pushed up, broke to the upside here. This swept the high. So from this point here to here, this was my swing. We wicked the low here. So this is a valid liquidity POI, because then we had pushed the upside. come back to this extreme point up here. We've mitigated, pushed down, and you can see that we're clearly in a range, but EOF I'm seeing as bearish on the 15-minute. We're in that key level at the extreme of the weekly. So I'm looking to see where I can position myself short. So you can see we have a clear supply chain here. And then also we've got a demand chain forming at the bottom. So towards the end of the previous week, I believe, let me just whack on this. Yeah, so we've come up, we've mitigated this big wick, which swept this and mitigated this, which mitigated the extreme. And then you can see we had this aggressive push to the downside. And then I was seeing this as we've got liquidity to target now. So even if this was just to come down to here before going back to the upside, that was my intentions. It was actually about here. So I saw price come back up into this point. It was the last mitigation within this chain. We're in the extreme weekly zone. So now if I drop down to the 1M, oh, actually, if we go back here. So I was also seeing this as an early enticement. So you can see it takes the highs, takes the lows. So you have like some early enticement breaks to the downside here. So we have some liquidity that's been taken. Let me just this. And then within this 15-minute POI over here, I was seeing if there's anything on the 1M that I could refine to. You had this buy candle on the 1M, and then failing that, it would have been something up here. This didn't really flip anything, so I was just using it as a refined thing. So we've taken liquidity, we've hit this refined 1M at POI, and then what I was seeing is, I'll just do bar replay, sorry. So this, we've had no reaction to demand at the minute. So we can see we've had a reaction to this wick. This wick was the thing, really, we took some liquidity, pushed up, mitigated. So now we've had a reaction to demand. Demand's failed. There's been no liquidity taken within this flip. So I'm anticipating to play the extreme. And now you can see I played this whole buy candle. And you'll see here as well, like, I ended up taking another trade here. But the reason is because when you see a candle like this that engulfs multiple candles, I've noticed over through multiple trades that I've potentially missed, that it's better to play a larger POI when you've got candles like this. It's just something that you can test and look for yourself within your end of days. And having said that, I played basically this buy candle, which is basically a 2-minute POI. So this candle and this candle would just be a 2-minute POI, which you can see here. So I'm anticipating this to be swept. So I put my entry on this. See, it's swept. Oh, and then yeah, broke this. That caused the pullback into the entry at break even. And then price came back up and tagged me up for break even. So then I was looking. We've taken out this low here, which I believe was the little 15-minute like internal low. So you'd see we're taking a higher, taking a low here. So we've had like a little fracture within the 15-minute order flow. Although you can see that this demand here was unmitigated, so potentially this is just inducement for that. However, I still in my head saw this trade idea as valid. Like nothing had changed really. If anything, we had more confirmation now because we've had the aggressive push down. Yes, looks like we've swept this low and pulled back aggressively, but then I waited this, so you can see we took the high, took the low. So now this is early enticement, again liquidity generation, but that's how I was seeing it in the moment. So I had inducement now for that extreme point right up here, like this last buy to sell wick before this push to the downside. Entered here with a 2-pip stop, and then as you can see I was taken out for a loss, and then that was me done for Monday. Just something that I've been doing, and given the market conditions recently, like they've been quite rangy, I've been limiting myself to just 2 trades a day, because the most important thing within trading is risk management and capital preservation. And like, I know back in the past, like a couple of years ago, like you would just keep taking trades and trades and trades, and then you could see yourself minus 5, 6, 7% DD in one day, because you get so caught up in just trying to make money every day, when in reality, just play your idea, limit the capital exposure per day, and you take the losses, you take a break even, just call it a day and come back tomorrow. And even if you miss a move, you're far better off missing a move than doing so much damage to your account. That's in my opinion anyway, and it just saves your psychology, because you'll just keep taking loss after loss after loss, and then especially if you're taking challenges, like you could end up hitting your max DD or whatnot. So being very disciplined with how much capital exposure per day or how many losses you take per day is just imperative for long-term success. But yeah, without further ado, let's just jump straight in to the next trades. So I didn't take anything on Tuesday. Wednesday I was busy, I was out and about, but this was the day to trade, because you had a sweep of all this liquidity from the highs here. You had an aggressive recovery, break to the downside, and then this price action here is just impulse and then chain. You usually get 3 mitigations and a move away. 1, 2. There's probably not a third here, but you see at the point, and then it just impulses away again. So yeah, anyone who managed to catch here, probably that would have been your $100 trades if you wanted it. But yeah, I ended up taking 2 trades in this down here. So what was I seeing? So everything was still bullish to me at this point in time. Alright, the 15-minute might have shifted bearish. However, I was happy to play. After this, we've had the accumulation, whatever, to push up to the upside. And then, yes, in hindsight, this is quite an aggressive pullback down, like return to zone consideration. However, we had this demand chain forming, and then once price came into this extreme point, I'll see if I could play basically a pullback trade. So it was at this point in time here. So if I just move to the left, you can see it clear on the 15 minutes. So we had this POI here. That was mitigated here. This took liquidity, mitigated here, and then this. You could say it's this whole thing had liquidity above, so we had inducement. We've come into it. You can see we've had a little break to the upside here. If I just unhide this. And drop down to the 1 minute in a second. So I was seeing if we could get the trade from here, pull back. I was looking at this POI here, or potentially something within this area up here. So after we had this little shift down here, if we go to the 1 M, it makes it clearer. So this is, yeah, 6 AM, so London's not open yet. So you can see we're taking lows here. Had a flip and shift at this point, and then this is the entry model. But because we're going counter 15-minute really, I wanted to wait for the. So we've had a mitigation of that, and then price broke to the upside again, and then I was seeing this as basically just a bigger version of this, just another entry model. So I was now playing the chain, and they had the liquidity sweep and break to the upside. You can see that it looks like there's some intent to the upside here. This is a 4 pip stop, so it's actually quite big, and this was an inside bar, which is why I played that candle. So once the price come down, I market executed within here, put my stop below the low, and then does that break even at that point? When it took the high that caused the pullback into my entry. and then I got taken out for break even. So if I just hide this now, so my next trade is taken here. So I play price forward. So I can see price pulled up and mitigated this, which was pretty much the decisional. I know we pierced the low, but then after this push up, went down, came back in. See, again, it had like taking the high, taking the low. So I was saying, maybe the 15 minutes doesn't want to commit to the upside yet, or at all, because you only have really a true confirmed shift once. So like we say supply failed here, and if it comes back in and then demand actually holds, we hadn't had that yet. So for all we know, this could just come down to the downside. So we had a mitigation of this, we had liquidity taken from here, and then you can see we had a little sweep here, pushed the downside, we come back in, mitigated. A little sweep within there. So I'm seeing this as a chain now. Like these inside bars that got swept and then aggressive push down. So I placed my limit on that. Yeah, right there. I had a 3 pip stop just to protect my stop loss above these highs. And then as you can see, I got taken straight out. And in hindsight, you can just see that we're taking the highs, taking the lows. To be fair, it didn't take the high here, pushed down, swept the low again, pushed up. But the idea was right because it ended up playing out. It was just I got a bit too early and got swept. It happens. And again, that's my capital exposure done for the day. Break even and a loss. So for the week, I'm in drawdown, and it just happens. Like, wasn't my greatest week. Well, definitely wasn't my greatest week, and it very subpar average week. But the thing is you're not going to have a good week every week. You're not going to be focused every day. You're not going to have a good month every month. And quite frankly, like, all you needed to do is catch one trade within this PA. This is the one that played out. Yes, my intentions are probably a bit skewed here, a bit wrong, given the fact of the aggressive recovery and return to zone. However, it is what it is. It's just part of the game. You can only learn and move forward. Like, yeah, I have weeks and days and months that are like this, but then over a long period of time, it's that. And don't get so focused on this, because it will just bear you down. It will. You'll think that you're not doing well, or you're struggling, so to speak. But if you extrapolate over a long period of time, you will be consistently profitable. My audio cut off towards the end of the trade recap recording, so I'm just doing a little outro here. I hope you enjoyed the video. It was a bit of a shorter one. Any feedback is welcome, and yeah, enjoy. I hope you have a great weekend and smash the rest of April. Yeah, take care guys, speak to you soon.